The market is currently open, and Bullish stock, trading under the ticker BLSH, is sitting at $37.76 USD, which represents a 1.01 USD or 2.75% gain on the day. Now, the common expectation is that today's modest upward movement is just a dead cat bounce or a slight correction following a punishing downtrend. The stock has lost nearly half its value since its IPO in August. Most investors are looking at the headline drop, tying it directly to the volatile nature of the crypto space, and concluding that this is simply a speculative play getting hammered. That's the surface-level reading, the general consensus. But the deeper reality, the insight that separates the casual observer from the truly informed, is that this stock's daily action is being driven by two highly contrasting forces unleashed by their recent earnings report. Genuinely strong underlying business performance is colliding head-on with an unexpected forward-looking spending outlook. The market is not reacting simply to crypto volatility. It's wrestling with the calculus of high growth requiring high burn. The stock's ability to hold on to a gain today, even a small one, despite announcing a higher-than-anticipated fourth-quarter operating expense projection, is the key tension here, suggesting that the street is starting to recognize the legitimate institutional adoption narrative underneath the fear of rising costs. They reported record-adjusted revenue, adjusted EBITDA, and adjusted net income for the third quarter, with adjusted revenue of $76.5 million, significantly exceeding analyst expectations. That's the reality that most people are overlooking when they focus on the stock's year-to-date carnage. The company, which is an institutionally focused digital asset platform, is clearly executing, launching new products like crypto options trading, which surpassed $1 billion in volume quickly, and securing their New York BIT license, a crucial regulatory win that opens up the U.S. market for their primary exchange services. The market's expectation was that a digital asset platform, particularly one with strong institutional backing and a massive balance sheet, would simply follow the broader crypto asset cycles, generating profit when Bitcoin and Ethereum are trending up and suffering when they are not. The reality, however, is that Bullish is fundamentally shifting its revenue mix. While transaction revenue was actually down year over year, its subscription, services, and other revenue absolutely surged, beating their own guided ranges. This includes revenue from liquidity services, lending, and their CoinDesk media and indices business. This is the structural change that savvy investors, particularly the institutional types that use platforms like interactive brokers to manage complex strategies, are keying in on. The growth in this SSO segment provides a critical layer of stability and predictability that historically has been absent from purely transaction fee-driven crypto exchanges. It implies a stickier business model, one that can generate revenue regardless of the daily spot price swings of digital assets. Think of it as transitioning from an all-or-nothing casino model to a more diversified financial services and data firm, the kind of business that the established players in traditional finance, such as Fidelity or Charles Schwab Intelligent Portfolios, would recognize and appreciate for its stability. Yet the stock is currently anchored by the $48.0 million to $50.0 million current quarter adjusted operating expense projection, which is about $3.4 million higher than consensus. This is the friction point. Are these expenses smart capital deployment for future growth, or simply bloated costs? The market, in its immediate reaction, defaults to punishing high expenses, a skepticism that often colors the reaction to any high-growth technology stock that hasn't achieved scale yet.